Hello, I'm Katie St. Ors, certified financial planner, tax strategist, and producer of The Deep Dive. Welcome to Season 3, Episode 40, and today we will do a deep dive into separating your business banking. Okay, it looks like Elizabeth and Michael are settled behind the microphones, so let's get going.
Welcome to The Deep Dive. We have a special deep dive. It's for Olivia from Austin, Texas.
Hi, Olivia. Yeah, she recently started her own hair salon. Very exciting.
Super exciting. And she's facing something lots of new business owners wonder about, right?
A really common question.
Yeah, it's about setting up a separate bank account for the salon. Sounds simple, maybe even a bit administrative.
Yeah, like just another task on the list.
Exactly. But Olivia, trust us, this one little step, it's actually huge. It affects your finances, your legal protection, even how your business can grow.
It really does. And Katie St. Ors, our producer, who's also a certified financial planner and tax strategist, she really flagged this as critical.
Absolutely critical. So this is Season 3, Episode 40, and our mission today is to really unpack why separating your business money isn't just like a nice to have.
No, it's pretty much non-negotiable, even if you're just starting out, like Olivia.
Okay, so let's dive in. Why is this separate account so foundational?
Well, it's funny, isn't it? So many new owners, they just want to keep things simple.
Yeah, fewer accounts, fewer passwords.
Right. So they use their personal account. Seems easier at first.
Yeah.
But that convenience, it can cause some pretty big headaches later on.
Okay, let's start with maybe the scariest sounding one. Legal protection, that whole corporate veil idea.
Right. So, Olivia, if your salon is an LLC, a limited liability company, that structure gives you a major benefit.
Which is?
Limited liability. Think of it like a shield, The corporate veil, it separates your personal finances, your house, your savings from the business's debts or any legal issues.
Okay, so if the salon gets sued or owes money, your personal stuff is generally safe.
Generally, yes. That's the idea. It's a huge advantage.
Sounds like a shield you definitely want, but it's not guaranteed.
Exactly. It's not bulletproof, and one of the main ways that shield can be pierced.
Let me guess. Mixing funds.
You got it. Commingling funds. That's the legal term for just mixing everything together.
So like putting salon cash into your personal account?
Yep. Or paying your rent with the business debit card. Things like that.
Okay.
When you do that, the line between you and the business gets really blurry. A court could look at it and say, hey, this isn't really a separate entity, it's just Olivia.
And then the shield is gone.
Pretty much.
Taxes stressing you out? Don't worry, 1-800-ACCOUNTANT is here. Expert help, affordable rates. Call 1-800-ACCOUNTANT today and leave the headaches to the tax pros. Click the link below.
You could suddenly be personally on the hook for business debts. It's a huge risk.
Wow. Okay, so the separate account is like proof.
Exactly. It's clear evidence. This account is for the business. That account is personal. It helps prove the salon is its own legal thing.
Makes sense.
And look, even if you're a sole proprietor where you don't automatically have that same legal veil, keeping things separate still brings so much clarity. It's just good practice.
Right. Okay. Legal protection, definitely a big one. What about taxes? Nobody loves tax season.
Oh, this makes a world of difference for taxes. Seriously.
How so?
Well, think about it. A dedicated business account. It basically organizes everything for you. All your salon income, all your expenses, boom, right there in one statement.
Instead of digging through your personal statement trying to find that one supplier charge from 3 months ago.
Exactly. Or trying to remember if that meal out was with a client or a friend. It's a nightmare.
Yeah, I can imagine. Leads to mistakes, missed deductions.
For sure. When it's separate, it's so much easier to spot every single legitimate business expense. And those deductions lower your taxable income, right?
Right. Less tax to pay.
But if you commingle, you might miss deductions. Or worse, you might accidentally claim personal stuff as business expenses.
Ooh, that sounds like something the IRS wouldn't like.
Definitely not. It raises red flags. In fact, the IRS actually recommends that all businesses, even sole proprietors like Olivia might be right now, use a separate business checking account.
That's telling, isn't it? When the IRS recommends something for simplicity.
It really is. It just creates a clean audit trail.
Yeah.
If they ever do ask questions, you've got clear records, less chance of penalties.
Plus just the time saved, right? Less sorting for Olivia, maybe lower accountant fees.
Absolutely. Time you can spend making your clients look fabulous instead of wrestling with bank statements.
Good point. Okay, legal protection, easier taxes. What else? Why else separate?
Financial clarity. And that leads to better management. This is really about understanding, like, how is the salon actually doing?
Okay.
Separating the money is step one for accurate bookkeeping. If everything's mixed together, it's just messy. How do you know if you're really making a profit?
It's like trying to balance your household budget with your neighbor's expenses thrown in. Impossible.
Right. With a business account, you see the cash flow clearly. Money in from clients, money out for rent, supplies, whatever. That visibility is crucial.
Especially for cash flow, which can sink a new business, can't it?
It's a huge factor. Poor cash flow management is a major reason businesses fail. Seeing it clearly lets you manage it proactively.
So you can make better decisions about pricing, maybe, or when to buy new equipment.
Exactly. You can create realistic budgets based on actual salon data, not guesswork. And you can make smarter strategic choices.
And doesn't tech help here too, like accounting software?
Oh yeah, definitely. Many business accounts link up smoothly with software like QuickBooks or Xero.
Oh.
It automates a lot of the tracking and categorizing.
Yeah.
Makes generating reports much easier, so you move from just, reacting to your bank balance to actually planning for growth.
So Olivia gets a clear dashboard for her salon's financial health. That's powerful.
Incredibly powerful for making smart moves.
Incorporate right the first time. Trust Busy's 20 years of experience. Over 1 million entrepreneurs served since 2004. Launch your dream. Click the link below to get busy.
Okay, now what about how the salon looks to the outside world? Does a separate account matter there?
Yeah, it does. Professionalism and credibility. It might seem small, but it adds up.
How so?
When you pay suppliers with a check that says Olivia's Hair Haven instead of just Olivia Smith, it looks more legit. Right?
Same when clients pay you, I guess. If they pay by card and see the business name.
Exactly. It reinforces that they're dealing with a proper business. It builds trust. Little things like that create a professional image.
And does that credibility matter beyond clients and suppliers, like with banks?
Oh, absolutely. If Olivia ever wants a business loan down the road, or maybe brings in an investor,
Right.
having clean, separate business finances shows you're organized, serious, and managing things properly. It makes you look like a much better risk.
It signals you're running a real business, not a hobby.
Precisely.
Okay, interesting. Is there anything else, any other maybe less obvious benefits?
Yes. Building business credit. This is a big one for the future.
Business credit. Like a credit score, but for the salon.
Kind of, yeah. Your business can establish its own credit history, separate from your personal score.
Huh. I didn't really think about that for a small salon.
Many don't. But that separate business account is like step zero in building that business credit profile. It proves the business has its own financial life.
So why does that matter?
Well, down the line, if Olivia needs a loan for, say, a big renovation or even a second location,
Okay.
lenders will look at the business's credit history and how well it managed its bank account. A good track record can mean getting approved, maybe getting better interest rates.
So it opens up future financing options based on the salon's performance, not just Olivia's personal credit.
Exactly. It's about setting the stage for future growth.
That's a really good point. Okay, any other practical perks of having that business account?
Yeah, just access to specific banking services designed for businesses. Stuff you usually don't get with a personal account.
Like what?
Merchant services is a big one. Easily taking credit and debit card payments. Pretty essential for a salon today.
Definitely.
Also, specific business loans or lines of credit, maybe payroll services if Olivia hires staff,
Okay.
often higher transaction limits, tools for managing payments coming in and going out, accounts payable, receivable, sometimes multi-user access if needed.
So tools to actually run the business more efficiently?
Exactly. Tools designed for business operations and growth, not just a place to hold money, but a toolkit.
Makes sense. Okay, we've covered a lot of whys. Does the type of business Olivia set up legally change whether she absolutely needs this account?
It does have implications, yeah. Though honestly, we recommend it for everyone.
But legally.
Okay, so for LLCs and corporations, it's pretty much mandatory in practice. That limited liability shield we talked about.
Yeah.
Commingling funds is the easiest way to lose it. Plus, the IRS often requires separate records for core, and banks will ask for your formation documents, articles of organization or incorporation, and usually an EI,
Yeah.
employer identification number. It's like a social security number, but for the business.
Got it. What if she had a partner? A partnership?
Partnerships, too, generally considered essential. It's usually spelled out right in the partnership agreement. How else do you track who put in what, how you split profits, pay shared bills fairly?
Right. Keeps things transparent between partners.
Totally. And again, banks will want to see that partnership agreement and an EIN.
Okay, so what about Olivia right now? If she's just starting out as a sole proprietor, just her, maybe operating under her own name.
Ah, the sole proprietorship.
Hmm.
Legally, is she required to have a separate account? Not always, no. Especially if she's just using her own name.
But
And it's a big but, everyone recommends it. The IRS, accountants, us.
for all the reasons we just talked about.
Exactly. The tax simplicity, the financial clarity, the professionalism, starting to build that business credit habit. It just makes everything easier and safer.
Can she open one easily as a sole proprietor?
Usually, yes.
But
Often you can use your own Social Security number to start, though getting an EIN is still a really good idea anyway. It helps separate things further.
so that idea that, oh, I'm just a sole proprietor, I don't need a separate account.
It's a common misconception, and honestly, it can lead to a lot of avoidable problems down the road. Just do it from the start.
Got it. So regardless of structure, the practical benefits make it a no-brainer. Okay, Olivia, hopefully you're convinced. What does she actually need to do to open one?
Right. The practical steps. It's not too bad, really.
Yeah.
First, maybe shop around a bit, see what different banks offer for business accounts. Then it's about getting your ducks in a row, gathering the info and documents they'll need.
Okay, what kind of stuff are we talking about?
Well, there's personal info they'll need from you. Your full legal name, home address, date of birth, Social Security number, or an ITN, if you use that.
ITN.
Individual taxpayer identification number. Also phone, email, and a government photo ID, like a driver's license. Pretty standard stuff.
Okay. And for the business itself?
Your official business name. If you're using a different name, like a trade name or DBA, doing business as.
Like Olivia's Hair Haven.
Exactly. You'll need that name and probably the certificate showing you registered it. Then the salon's address and phone number, your EIN if you have one, or your SSN,
Okay.
the date you officially started the business, your industry cosmetology. They'll likely ask for an estimate of like how many transactions you expect each month and maybe the dollar value.
To gauge the account activity.
Yeah. And then the big one, the business formation documents. These depend on your structure.
Can you quickly recap those?
Sure. Sole proprietor, maybe just your ID, unless you have a DBA cert. Partnership, you'll need that partnership agreement.
LLC.
Articles of organization, maybe the operating agreement too.
Corporation.
Articles of incorporation, possibly corporate bylaws. It's always smart to just call the bank or check their website first because the exact list can vary slightly.
Good tip.
Oh, and ask about a minimum opening deposit. Sometimes there is one, sometimes not. Having all this ready just makes the process way smoother when you go in or apply online.
Awesome. That's a super helpful checklist for Olivia. Okay, let's wrap this up. What's the main takeaway here?
The core message is simple. Getting and using a separate bank account for your business isn't just ticking a box.
Right.
It's foundational. It protects you legally, makes taxes way easier, gives you the clarity you need to manage well, makes you look professional, helps build business credit, and unlocks useful banking tools. It really touches everything.
So, Olivia, if you haven't done this yet for your salon, make it priority number 1.
Absolutely.
Thanks for joining us for this deep dive.
It's been a pleasure.
We'll see you next time.
See you later.
Okay, great. That's a wrap. I'm Katie St. Ors, and let me send out a huge thank you for listening. If you want more content on personal finance and small business, head over and find me on YouTube. You can also find me on Spotify, Amazon Music, TikTok, and Apple iTunes. Thanks again for tuning in, and I'll catch you on the next Deep Dive podcast.